Nvidia's biggest customers are building their own AI chips. That sounds like a threat to Nvidia. But it may also create a different winner. Because Meta, Google, Amazon, and other hyperscalers do not build the entire AI chip ecosystem alone. They still need partners. And one company keeps appearing in the background, Broadcom. Meta is preparing Iris. Google has spent years building TPUs. Big tech wants more control over AI infrastructure. But designing a chip is only part of the problem. You need packaging, networking, manufacturing coordination, system expertise, and the ability to deploy custom silicon at enormous scale. That is why Broadcom matters. So here is my MarketMind view. The threat to Nvidia may become the opportunity for Broadcom. Nvidia sells the AI platform. Broadcom helps customers build their own. Has Wall Street already figured this out? This video is for education only. It is not financial advice. Let's break it down in simple English. The first AI trade was obvious. Nvidia. The world needed more AI compute. Cloud companies built data centers, and Nvidia sold the platform at the center of the boom. But the next AI trade may be hidden deeper inside the infrastructure stack. Custom accelerators, networking, memory, power, data centers. The next dollar of AI spending does not automatically follow the exact same path as the last one. And Broadcom sits in two important areas, custom AI accelerators and AI networking. This is why I do not think Broadcom should be described as the next Nvidia. Nvidia's advantage is flexibility. A broad AI computing platform. Broadcom's opportunity is specialization, working with large customers to build technology around specific workloads. So the real question is not, can Broadcom replace Nvidia? It is, can Broadcom benefit as Nvidia's biggest customers demand more options? So what does Broadcom actually do in AI? For this video, you only need to understand two things, custom accelerators and networking. A company like Meta understands its own AI workloads, and it may decide that a specialized chip makes sense for a specific job. But saying, we want our own AI chip does not mean the company builds everything alone. A real chip needs architecture, memory integration, high-speed connections, packaging, testing, manufacturing coordination, and system deployment. This is where Broadcom can become valuable. Broadcom works closely with major customers on customized semiconductor systems. In simple English, the customer knows the problem. Broadcom helps turn that problem into specialized silicon. That is a very different model from selling the same general platform to everyone. And this is not only a future story. Broadcom's AI numbers are already huge. In its second fiscal quarter of 2026, Broadcom reported $10.8 billion of AI semiconductor revenue. That was up 143% year over year. The company said growth came from custom AI accelerators and AI networking. And Broadcom said it expected AI semiconductor revenue to reach about $16 billion in Q3, more than 200% growth from the previous year. So custom AI chips are not just an experiment. Networking is not a small side business. Billions of dollars are already moving through this part of the AI infrastructure market. But remember what we learned from Nvidia. Strong growth does not automatically mean a stock is cheap. The faster the numbers rise, the faster expectations can rise with them. Meta's Iris chip is a good example. Meta wants more control over its AI infrastructure. It is preparing Iris for its own internal AI needs. Broadcom is helping design the chip. TSMC manufactures it. That structure matters. Meta understands its workloads. Broadcom brings custom silicon expertise. TSMC brings advanced manufacturing. So when investors hear, big tech is building its own chips, they should be careful. In-house does not always mean alone. And Iris is not simply replacing every Nvidia GPU inside Meta. It is meant to augment the large quantities of Nvidia and AMD GPUs Meta still buys. The future may not be Nvidia or custom silicon. It may be Nvidia and custom silicon. Different hardware, different workloads. And if large technology companies keep following that strategy, Broadcom may benefit. Now follow the money. In the Nvidia video, we said, more AI spending does not automatically mean every new dollar goes to Nvidia, but that dollar does not disappear. It moves somewhere. Some still goes to Nvidia GPUs, but more can flow toward custom accelerators, networking, memory, power, and data center infrastructure. Broadcom is interesting because it sits close to two of those flows, custom silicon and networking. This is the core thesis. The threat to Nvidia may become the opportunity for Broadcom, not because Nvidia suddenly loses AI, but because its customers want a second path. Nvidia sells the AI platform. Broadcom helps customers build their own. Now let's talk about networking. This may be the most overlooked part of the Broadcom story. Imagine one powerful AI accelerator. Now imagine 100,000 accelerators working together. The problem changes. You do not only need powerful chips, you need those chips to exchange enormous amounts of data, quickly, with as little delay as possible. The bigger an AI cluster becomes, the more important the connections become. Think about a city. One great building does not make a city work. You need roads, power lines, communication. The larger the city becomes, the more important the network becomes. AI infrastructure has a similar challenge. Broadcom specifically said AI networking helped drive its latest AI semiconductor growth. So, Broadcom is exposed to more than custom accelerators. It is also exposed to the problem of connecting massive AI systems. Here is the simple version. AI is not only a chip problem, it is a connection problem, and Broadcom is exposed to both. But Broadcom's AI opportunity comes with real risks. The first is customer concentration. Broadcom said its top 5 end customers represented about 40% of fiscal 2025 net revenue. Large customers can create massive growth, but if one major customer's roadmap changes, a delay can matter, a deployment can move. AI spending can slow, or a project can take longer to scale, and concentrated revenue makes those changes more important. There is also a newer risk worth watching. Broadcom disclosed a backstop arrangement connected to AI racks using its custom AI accelerators. The maximum exposure can reach $29 billion as those racks are deployed. This does not mean Broadcom has lost $29 billion. It does not. But it shows how large and financially complex AI infrastructure deals are becoming. The opportunity is bigger. So are the execution questions. My view? Customer concentration can look like strength during a boom and become a risk when one customer's plans change. And now we return to the same problem we discussed with Nvidia. Expectations. Broadcom has a strong AI story. AI semiconductor revenue is growing rapidly. Custom accelerators are becoming more important. Networking demand is rising with AI cluster scale, and large technology companies want more custom silicon. But Wall Street can see this too. The story is no longer hidden. A hidden winner stops being hidden once everyone discovers it, and that creates risk. Broadcom can keep growing. The AI trend can remain strong, and AVGO can still disappoint investors. If expectations grow even faster than the business, so do not ask only, is Broadcom winning in AI? Ask, how much winning has the market already priced in? Because a great AI story is not automatically a great stock at every price. So, is Broadcom the real winner behind big tech's custom AI chip boom? Here is the MarketMind AI 5-question framework. Pause here. 3, 2, 1. Screenshot this. Question 1. Custom AI growth. Is demand for custom AI accelerators still accelerating? Question 2. Networking. Is AI networking growing with the scale of AI clusters? Question 3. Customers. Is Broadcom becoming too dependent on a small number of hyperscalers? Question 4. Margins and execution. Can Broadcom turn AI growth into high-quality earnings? Question 5. Expectations. Has AVGO already priced in the custom chip boom? This may be the most important question. Broadcom can win more AE business, and AVGO can still disappoint investors if expectations rise even faster. Custom AI growth, networking, customers, execution, expectations, those are the 5 things I would watch. So here is my conclusion. Broadcom is not the next Nvidia. It does not need to be. Nvidia owns the broad AI platform. Broadcom helps major customers build specialized systems. That position is valuable. But the investment question is not whether Broadcom has AI exposure. It clearly does. The question is whether Broadcom's AI growth can keep outrunning the expectations already built into AVGO. Next week, I want to continue this semiconductor series. Micron, AMD, TSMC, ASML. Comment the ticker below. I'll take the most requested company and break it down with the same MarketMind framework. This video is for education only. It is not financial advice. We decode the markets. You make smarter decisions. I'm MarketMind AI. See you next time.